The Federal Reserve kept the federal funds rate the same at the meeting last week, and the Consumer Price Index data came in favorable. So what does all this mean for people wanting to buy or sell a home? I'll break it down next. If you get some value out of this, you'll like what you hear, subscribe to the channel, click on the bell for notifications, and if you want to schedule a call about how all this news and financial policy that's being made affects your real estate plans, you can do that with our amazing team with the link in the comments. So Jerome Powell came out. The Fed meeting was last week, and as expected, the Federal Reserve did not change the federal funds rate. They left it as is in that 525 to 550 range, which is what people thought. And the market responded pretty favorably. But we also had a double whammy of CPI data. That's the Consumer Price Index that measures inflation. That came in below expectation, meaning inflation was down a little bit compared to where people thought it was going to come in. And that caused the markets to rally, right? We saw the Dow increase. We saw mortgage rates drop a little bit into the low to high sixes locally here. So excellent news coming out of that Fed meeting, and excellent news for people that want to buy or want to sell, because lower rates mean more intent and more serious buyers coming to the market. And the comments afterwards are what you always want to pay attention to. And the Fed finally did what a lot of people are expecting them to do, or had expected them to do, which is they've revised their policy based on how persistently high inflation has been and what the jobs market's done. So originally, at the beginning of the year, a lot of people were expecting 3 separate rate cuts in 2024. Now the Federal Reserve is saying expect 1 rate cut in 2024 and more in 2025, and that the target is still on 2% inflation. That was made very clear. So if you look at this dot plot that they have, the dot plot is where all the voting members of the Federal Reserve, they tell you their position, what they expect to do, and what they expect to happen over a period of time here. And the dot plot shows we're going to see a more aggressive rate cut policy in 2025. So what does this mean? We saw inflation come in a little more favorable, meaning it's lower than expectation. We saw that the Fed's going to be staying the course longer with their rate policy. And we also saw a couple weeks ago, and we talked about it here on the show, that Fannie Mae is revising their mortgage rate predictions for 2024. It looks like they're going to be kind of in this range for longer. So now that we know the Fed isn't going to be cutting rates aggressively, and a lot of people are predicting when they do start cutting them in 2025, it's going to be a much shorter rate cut cycle than what we've seen in the past. That tells me the rates coming in the mid to high sixes, even 7% in some cases, that's where rates are going to be moving forward. That's where rates are going to hang for the foreseeable future. So what does this mean for people that want to buy or want to sell? So for sellers, if you're waiting for rates to come down, the only way that really happens is there was a global pandemic, there was a major financial crash. It would take something catastrophic like that to happen, and that probably means home values are going to be coming down. So knowing these rates are going to be where they are for the long term and the Fed's backing that policy up, I would stop waiting for rates to save you and look at what's best for you in terms of making a move. The good news is prices are still increasing. We're seeing inventory schedule a call with you right in the link in the comments to have one of these strategy sessions to give you the information you need to make a decision in the marketplace. That's the good news. And the more information you get, the better you can navigate what happens when the Fed does start cutting rates, when rates may come down in the future. The more informed you are now, the better off you're going to be, whether you're looking to sell or buy in the next 6 to 18 months. The Fed is doing what a lot of people expected, and this tells me we're going to be in a more stable market moving forward, where you can make better, well-informed decisions than that go, go, go rushed market of 2020 to 2022.